Hi, this is Randy Finney with Right Side of the Chart, and this is an early session update for Thursday, July 10th, 2025. It is 10:06 a.m. Eastern Time. I wanted to get one out to you early. I'll be leaving town this afternoon, so I will be up here working up until about lunchtime today, leaving shortly after that. And again, wanted to get one out before I left town. I'll pick things back up on Monday. And some things I'm seeing here that I just want to share with you guys as far as timing goes. Talk about these divergences, the marginal new high setting up, for a while now. Again, marginal new highs, divergences, those aren't sell signals, but we do have today some things I like, and I'll let you know, even though I'm leaving town. I usually don't do this. I just increased a significant amount of shorts, including VIX longs. And the reason for that, we finally have now, it's intraday. Again, when you're trading a daily time frame, you want to ideally, if you want to solidify your odds or increase the odds, you wait for a solid daily close below a trend line. However, I'm not going to be here at the end of the day. Number one, that's me. So I always say you guys do you, I'll do me. I'll tell you what I'm doing. But I think this one will stick. We're breaking the trend line right now. As I showed you in the last few days, these are the trend lines I've been harping on. Got them all out to you in videos and I think some screenshots. There's QQQ. Here's SPY. SPY is not there yet, but if QQQ, if the breakdown sticks, SPY will most likely follow. You want to look at VTI as well. That's kind of the market. That line needs to be, I don't know why it drifted. Sometimes they drift, meaning move slightly. You want to come in and capture the lows right there at April. This reaction low there, you want to either capture, I always say trend line drawing is an art, not a science. I like to capture as many bodies and or wicks or shadows, the skinny part, as possible. And so that's where we're at. Now, let me show you something on QQQ. Because QQ, it's all about the Qs. We know that. It's these big tech companies that have led the market. And I'll show you in a second what evidence we can, show you the evidence, the outperformance of the QQQ, the very heavy cap-weighted index versus the equal-weighted. But one thing I like to look at too is the when you have divergence. I always say, again, I keep repeating myself, divergence is not a buy or sell signal. If it's bullish divergence, it's not a buy signal. It's a condition. If it's negative or bearish divergence, it's also a condition. But what you want to see, I like to, again, this is just in my book, and I'm not literally speaking, figuratively speaking, I like to see divergence confirmed via a second lower peak in the PPO. And if you don't have a PPO, you can use a MACD, very close cousin. And so this is what you have. There's a peak that put in a high. This is a higher low. And again, these are momentum indicators. So the problem with that, and the reason I like to see that effective, a bullish crossover to effectively confirm a lower low, I'll talk on that in a second, it's because momentum indicators, when you're going up, they're going up. And they can continue to go up, and then you no longer have divergence. So what I like to see is a bearish crossover on the PPO. It has happened, but again, today's not over. I'm going to give you the histogram right now. And this is it right here. See the little red speck right there? That means this histogram is just a visual representation of the differential between the two lines. In other words, how far apart they are. The PPO line, which is the blue line there, and the signal line, the white line, or the 9 EMA. All right, so what does that mean? Is it the be all end all? No, but it's a check mark. And so as I've stated repeatedly recently, this is the first divergent high we've had in the stock market in all the major indexes since back in mid-April right there. We all know what happened. It was extremely profitable to trade both on the downside and then to reverse at the long and cover those and go long, which we did. 25% drop in QQQ, actually a little higher. Yeah, about 25%. And that was, again, the last divergent high. And you can see what happened. Remember, it was divergence. This was our divergence. We already had a previous divergent high, and we had a correction, but we started going sideways, put in a new and marginal, but still divergent high. You can see the slope of the indicator started to steepen off even. And so at that point, PPO crossover, made a bullish crossover, put in a higher high, and it was right here. There's your bearish crossover that effectively confirmed that second divergent high. And I put check because I was doing videos and predicting or being very open to and stating that if we did break out, because I recognize the range what it is, I always talk about, and I did back then, these trading ranges, sideways trading ranges, like energy building like a coiled spring, and that typically the direction you break from that range is the next tradable trend. And I went so far to say, of course, we could break to the upside or downside. Anybody to say otherwise would be a fool. Just coded in bias. But again, by reading the charts, bias is a thing you have to have. You can't be Switzerland all the time. I mean, I'll just go with the charts say. You have to have a read and interpretation. In other words, that allows me to decide which breakouts to take, because I think they're the real deal, or which ones to pass on. And so in this, I predicted that if we broke out, any new high would be a marginal new and still divergent high and most likely fail, resulting in a downward rejection back to the bottom and then out of the range. And that's what happened. And as you can see, this was the bearish PPO crossover. And look at the timing on that. That did the trick. So again, we had another bearish PPO crossover right here. But guess what? What was I doing right there leading up to the April 8th lows, just in the coming days before and after? Started covering shorts, and then the morning of the very bottom, in the comment section there, I made it very clear on April 7th it was no more shorts, I'm sorry, I said covered all shorts, gone to a full long positioning. And so therefore that bearish PPO crossover there didn't mean anything to me. It also didn't confirm any type of divergence there, especially negative. We already had negative divergence. I'm not looking for negative divergence in a downtrend. I'm looking to cover shorts. I'm looking for reasons to start covering those shorts and getting long. Because I always say short sellers are a rare breed. And the thing about them, there's tremendous, you can make more money shorting 5-6 times than you can as a long side trader. Because stocks tend to, and always if you look back historically, tend to fall a lot faster than they rise, usually wiping out months, even years of gains in a matter of just weeks or months. Now, the thing about it, and I've always said this, you have to be Johnny on the spot. Your timing has to be infinitely better than just, trading in a bull market. In a bear market, not so much. We've got to get the primary trend. When we get a primary trend, a secular bear market, that's going to be a different story. Okay, so but the thing is, you cannot stay too late to the party. And an great example was right there. We had the biggest single day gain right after that, and the biggest 2 or 3 day gain in decades, really. And that's a great reason why, again, you can't stay too late to the party. All right, so I just want to mention that was it. But this right here, so that bearish PPO crossover meant little. This one meant a lot because it confirmed that divergent high, and that's what we have today. So watch this. I won't be around at the end of the day. I'll be on the road, actually, heading over to the other side of the state, over to Miami. But that's something to watch for today. And again, could be jumping the gun here. We'll see. And I'll be able to, after hours, I usually trade futures for the indexes are my go-to, so I can, put my stop losses in place, leave town, and that'll be it. All right, what else did I want to show? Oh, yeah, let's talk about the rest of it, the top Mag 7, Mag 8. NVIDIA, again, we have these very similar patterns here on the market leaders, no coincidence. QQQ, like I said, is simply a sum of its parts. And then QQQE, I should go back to equal weighted, is an equal weighted sum of its parts. There's another line drift. QQQE is solidly broken down right there. RSP, the equal weighted S&P 500, hasn't even taken out the previous high, but nor has it broken this trend line. So you'll get additional check marks to see all the indexes, the equal weighteds, the S&P 500, VTI also breaking down, and that hasn't happened yet. And then I already went over this the other day, this week. So you can see all these charts, the levels to watch. And again, the way it works, it's not a farthest thing in the world right now from an all-in moment. It's just kind of maybe take some shorts here. But let me go back to the indexes, the components of the NASDAQ 100, which are also the top components, the S&P 500, and show you what would be, a reason to help solidify the sell signals they're at on breaks of these trend lines. And, again, they're off the April lows. You have these steep bearish rising wedges, complete with what I like to see, the negative divergences. First time we've had a divergent high in NVIDIA since right here. We were short there. We shorted that divergent high, that bearish engulfing candle. We covered that and a lot of things back here. Even that SMCI, I mean, if you look at SMCI, the last time I just gave it to you as a new trade idea today. We're at the top of that triangle pattern. Let's see. So we shorted SMCI. Here's a daily chart at that trend line right there, right off the on this break, and then on the what was it, April 4th, we hit T4, T2. So T2 was hit, and then this was a time in the next 2 days afterwards, start covering up all shorts, expecting a bounce. I even followed up with a chart right after that showing a maximum bounce target to the same exact trend line that we just hit today. So that's today's short on here. I'll get to the live chart on SMCI because it's going to follow NVIDIA. It's NVIDIA. I call it. SMCI is Robin and NVIDIA's Batman, right? SMCI is its little sidekick, which is completely dependent on on NVIDIA because they set up the servers for these, the big AI factories or whatever you call them that run the NVIDIA chips. SMCI, and that's it. So look, it's either take it or don't take it. I know most won't, and that's fine. And again, it's objective. That's a 1, 2, 3, 4, 5, and now 6. Just a lot of reactions off that trend line, forms a symmetrical triangle pattern. I gave you a stop there that provides an excellent risk-reward ratio if you're targeting my final target. Some might only want to just another pullback, another jog down within the wedge. And then, a breakout, obviously upside breakout would be bullish. That's why I said if you're only targeting a, shallow drop to T2 or 3, maybe the bottom of the wedge, maybe a day or somewhat, you got to give it a little room in case they want to just have a false breakout there. And that's I consider a relatively tight stop for that final target because the risk-reward ratio is so high. You could have a wider stop, a more liberal stop above that 64.60 resistance if you wanted. Either way, we'll see where that one goes. Again, so this is a case where I made an objective case to short a stock without a sell signal. This thing is clearly in an uptrend. It's at a multi-month high. With no sell signals, bounced, nice reversal. There's my T2 down here. Second target level was right here. And now that's currently T4 for the new trade, right? So just T4 there, T2 there, T4 now. All right, let's look at the rest of them. NVIDIA. So NVIDIA needs to break that trend line. I believe I have an alert. If not, there it is. Microsoft right there needs to break nice, clean. Look at this trend line. Look how many reactions. I'm not going to count them for you because it take too long, but that's a price channel. Nice price channel, negative divergences. And Apple's just been dead money stock. It's back testing the 200-day moving average. I haven't talked about it recently because it doesn't matter to me as much. I always say 200-day is usually a key level. It used to be very key for Apple, but Apple's violated the 200 so many times and recently that it's something to note that it's below its 200s. And again, Apple's kind of doing its own thing and the rest of the market's going up. That also should be maybe a tell. On the market. Apple, the former leader for the past couple decades, it's been the top component for the majority of the time. Amazon, look at that wedge, look at that trend line. Amazon, you have a back test right here. This is the primary uptrend line off the key 2023 lows. Breakdown, back test 1, back test 2 has been back testing with this minor wedge. So that's what I see. When I look at Amazon, I see an uptrend line right here off the recent lows right there, and negative divergence again for the first time since right here. And there was our sell signal. We broke that bearish rising wedge right there from the sell signal, not from the highs, but just from the sell. Well, we can measure from the highs since that was our divergent high. The stock dropped 34%. We have an almost identical technical posture. And that's it. So not much else to add. So time for let's see if we get a rejection. If it can break that trend line, it's starting to crack. We'll have to see how it closes end of day. Again, I wish I would be here at the end of today of all days, but gotta go. Alphabet. I don't know if you can see it here. I have all these convoluted. In purple, I have what could be. We'll see. Time will tell. marked it up. That's why I put a question mark. Left shoulder, head, right shoulder, neckline 1, neckline 2. Let me draw it out. So this would be a possible head and shoulders pattern. Very common that you see them sloping. You have sometimes the necklines are horizontal, sometimes they're upward sloping, sometimes they're downward sloping. This is a downward. So I have neckline 1 or 2. Now, the reason I have question marks right here, these question marks get removed because now we have really nice symmetry at this point in time on the pattern, right? Meaning the right shoulder is symmetrical to the left shoulder off the head. There's your measured target. Comes down to this target I have here, about 105.91, which would constitute a drop of about 39% on alphabet if hit. But it's still just question marks because this is only a potential pattern. What happens to happen, we're at resistance with negative divergence too, I should add, divergent high. But we need to see the stock come down. There's several components to the head and shoulder pattern, some I just listed, but one of the components you need to see a decline. You need to come down and finalize that right shoulder now. And you also want to see it on above average volume. That's one of the criteria. You want to see above average volume on the formation off the head, off top of the head, and off the right shoulder. Doesn't matter over here on the left shoulder. So we'll watch that. Again, if it does this, wants to go up and make a full back test of this trend line, just like I showed you, what was it, Amazon was just doing, then you might still, you could stretch it a little bit more, but if you get up a lot more than that and the right shoulder comes big as a head, it's not that. And it doesn't have to be that to do anything. I'm just saying keep an eye on that. That's something to monitor going forward because that would have bigger implications if that pattern does finalize or materialize. Meta, I'm just showing you the levels, divergent high, little minor trend line break, price channel there, a lot like Microsoft. All right, so that's most of them. Broadcom's in there. That one hit our stop, the suggested stop. Again, if you took it, you'll decide where your stop is. That's a relatively tight stop. I have deeper targets. You could certainly use a wider stop. I think we shorted it right here recently. And so we're slightly above that 270 level. And again, if all these, I'm going over the Mag 10 right now, 11, whatever top holdings. If the majority of those break down, then that's a high probability sell signal. If only one or two do, or QQQ closes down below that trend line today, but let's say SPY holds it, VTI holds it, and they rally off, then something else is going on. That might be a whipsaw, and QQQ may regain the trend line. But if those guys break down, this one will. The level you want to see on Broadcom is right here. You have this nice uptrend line, negative divergence. The divergence is really big on Broadcom. When you see divergence on the daily chart that big, go out to your weekly charts and that'll kind of paint the bigger picture. I think a lot of investors and traders and even the so-called expert technical analysts that come out on CNBC and Bloomberg, they're usually just on the daily time frames. This is sometimes why my moves both on long side trades where I have high double-digit, triple-digit gain potential on a lot of the trades, many over the years on the site, and then big downside targets that usually dwarf most people. It's because I incorporate the longer term time frames, never take my eye off the ball. And on Broadcom, it's just the nature of, these corrections are usually measured in very high double-digit drops. That's a 50-something% drop there. Again, it doesn't look like it's just the nature of this beast. 40-something% there. 26% or so, right there. That might have measured that out beforehand. So that's it. That's what that one looks like. And then there's a couple more in the group. Tesla, remember, most recently put in a divergent high. There's a nice, remember that was the first divergent high on Tesla on the daily chart. Right here, you can see the divergence lines. Since right here. Nobody, I repeat, well, not nobody, but yours truly, maybe a few others, wanted to short Tesla here. Everybody wanted to buy Tesla because it was going to go to the moon. Because, Elon Musk, you got to forget about the car. You got the cars. You got Trump's buddy now. Again, back here. Everything was good, but the stock from there, after that divergent high, the technicals played out. Hit the fifth target right there at a 6 total, and that was a 56% drop. And we came full circle. We rallied off that T5, fifth target right there. And put in this textbook bearish rising wedge with negative divergence And so far, we're moving down. That was the first, again, my point is that was the first and only divergent high on the daily since back here. And so now you have this uptrend line. If taken out, you'll also have lost the 200-day moving averages again. You can see, like many stocks, Tesla, typically you're in a bull trend. They buy pullbacks to the 200s when you're above it, and you're in a bearish trend when you're down below it. So we'll see if what happens to Tesla. Netflix took out the trend line recently after putting in that big divergent high. This one's on a sell signal, negative divergence, and that's what the top components look like there. And the VIX, I believe I said it right here, and I might have said the same thing back here. Definitely said it here. The VIX is, I use the word quote unquote cheap on sale. And VIX is certainly getting cheap now. Well, by that, like the VIX could go on, especially these ETNs that track them. Over time, you're going to lose money if they decay. So you got to be also like a short seller, more precise with your timing. But it's cheap. It could be considered a hedge against long positions, a pure play short. You don't have to put a lot to make money, but again, you have this divergent low in the VIX. Now, I mentioned it here. Just like the stock market, the divergence has only gotten bigger. It's far from being taken out. Again, it's grown, and typically the bigger the divergence, the bigger the ensuing or the following move is. And so that's what the VIX looks like. And again, guys, I could sit here for an hour. I'm not going to do it. If you read the headlines, you can read. There's all these risks, and the market has just shrugged them off, and they're ignoring all these risks. The potential for inflation to resurge. I've talked about crude oil repeatedly. I've been on interest rates, showing you that the long bonds in spitting distance of multi-decade highs may or may not happen, but that's there. You got Trump just whimsical, the latest 50% because he doesn't like the persecution of Brazil's former leader, so he's going to slap a 50% tariff on Brazil. And again, there's that whole taco thing, but I've spoke to that recently, and Trump's ego got pretty banged up when that moniker was put on him last time, and we'll see if he cows down as quickly this time going forward. Again, I'm not, you guys figure that out, but so all I'm trying to say is the VIX is it's set up constructively, and that brings me to another point I want to talk. Okay, as you know, I like to loop back. There's some great questions and comments put on the site, and I like to address those when I can. This one, somebody asked here about natural gas. Said, why doesn't UNG correlate more with natural gas futures? First of all, natural gas is the most volatile thing out there, and it's different from a lot of commodities. You have the and unique storage issues and things like that. So the futures can vary widely. There's all that backwardization, contango, all this other stuff. You have the fees that the ETNs have to pay to constantly roll the futures, and so you're not going to have a perfect tracking. But again, if you don't trade futures, you don't have many choices to trade natural gas. So, but somebody mentioned here they thought that the chart in NG, natural gas future, wasn't nearly as constructive as UNG. And I just wanted to speak to that real quick. And my answer was, or my reply was, it depends on how one defines, constructive, as well as what time frame they're referring to. Okay, the 60-minute chart of NG, which are natural gas futures, looks constructive to me, but from a potential trend reversal / trade setup perspective, with a buy signal to come on a break of the 60-minute bullish falling wedge. I just gave you that today. You had a new homepage post on it. And I just covered it in a video recently. There's also a constructive chart on something that's clearly in an uptrend with little or no evidence of a current or impending reversal. In other words, I wouldn't put, let's say, NVIDIA in that category. It's certainly in an uptrend, but with the divergences and all, I don't consider that I consider it constructive, setting up for a potential reversal, but needing the proper catalyst. That's the sell signal that we don't have, such as, but not limited to, a break of the trend line that I showed you earlier. So, but there are some charts where something's moving up in a bullish uptrend. Maybe it's had a nice correction. It's worked off all its overbought conditions. It's worked out, doesn't have any divergences, and it's pulling back to support. That's a constructive chart of something that's going up. So I just wanted to mention there's two types. If I refer to a chart as being constructive, if I'm looking at a long trade, something that's in a clear downtrend, a bear market, like we picked a few bottoming plays recently, Pepsi, Lululemon, some others. Those were constructive. Now, a regular, you put somebody on CNBC, they're going to say, that's a horrible chart. This stock's been in a downtrend for a year, 2 years. To them, that's an ugly chart, not constructive. And again, so hopefully that's clear. Constructive with potential for a trend reversal, or constructive that it's, a trade with the trend instead of a counter trend trade. All right, so I already gave you the charts on nat gas. That was on the home page today, so you can see that. I threw it out in a video the other day, showed you the trend line. We haven't broken it out yet, but if and when we do, then that will be a buy signal. And I like that one right now as well. So really that's it. Let's keep it short. Let's wrap it up. I just wanted to again go over the indexes, tell you that for the, getting a little, potential checkbox here today, especially if we can finalize this bearish PPO crossover. I turned off my histogram, but you saw it there earlier. So another way to look, if we close here, or we're down 0.44% and slightly below the trend line, like I like to say, the redder the better. So if this candle, but I have it in blue here, looks like this today, all the better. If we have to close right here and I have to squint to say, did we break below the trend line or not? You might want to temper that, hold off, wait on the short, or just take a small position and recognize it whipsaws. Again, I have a pretty good degree of confidence, or I would not have shorted this morning. But there's SPY right there, still below there. Again, that would be an additional check mark, as would a bearish crossover on the PPO on SPY and everything else there. And then, of course, that's just the markets. Additional check marks to me come on things like TLT, IEF. TLT, as I highlighted recently, came full circle off that divergent low, put in a divergent high, broke down. When we were here last week, I gave you this same chart, told you sell signal 1 come and break on that trend line. First target there, that one was its support taken out. Then second target / support, that trend line, that one was taken out. And this is just simply the first kickback rally, or it was yesterday. And so watch this. Again, you do this, power on through, especially if you power on through and take out these divergences. Hey, that's net bullish, or should be net bullish for the stock market, unless the big caveat is if this happens because the stock market's doing this, especially in a very aggressive fashion, falling hard, and you get a flight to safety bid in treasuries. But if the stock market continues to climb and treasuries prices fall, which means yields are rising, that is going to be, it's going to take us to, remember, that's the long bond there. I'm watching the long bond. I'm watching them all. Somebody pointed out the Japanese 40-year. Definitely keep an eye on that. That rattled the markets last time it broke out to new highs. And so those are some of, but not all, the things I'm watching. All right, I do want to keep it short here. Let's wrap it up, 28 minutes. I'll get the video out to you. I'll do my best to answer any questions before I leave town today. Yeah, and if you want any updates on any existing trade ideas, anything else you're watching, let me know in the comments section. This has been Randy Finney with Right Side of the Chart. Have a great day.